Welcome, everybody, and thank you for joining today's webinar, Contemplating Your Exit, a Business Broker's Perspective. This is our monthly installment of Contemplating Your Exit series, where we bring professionals to these webinars to talk about a specific thing that a business owner or an advisor who's working with the business owner should be thinking about as they plan their exit, whether it's now or in the future. I'm really honored today to have a good friend of mine, Russell Cohen, out of Florida. Russell and I have known each other for 6 or 7 years now, and he has been a great help to me, but also a true inspiration and something to aspire to. Russell has been doing this for, I'll just say, many years, correct, Russell, and has sold over 600 businesses, which, as a fellow business broker, that number is just, that's Mount Rushmore territory. He's won many awards in both the state of Florida, Broker of the Year, most deals done in a year, as well as many national awards through the International Business Brokers Association. So Russell, I'd like to welcome you to today's webinar. Thanks for joining us, and we're going to get started here.
Great, thank you for having me.
So let's move on to the next slide. So real quick housekeeping. This is, if my computer will work properly, we're talking in general here. All these concepts we talk about do apply to small and large businesses. I just like to get that out of the way. But let's jump in. So here's what we're going to do today. Here's our overview. What does a business broker do? 6 items that Russell has identified through all his experiences on what business owners should work on now, some common mistakes that brokers see, and we're going to open it up to questions for everybody. I do want to add that there is a chat and a question section on the webinar, so feel free to answer any questions. We will try to address them live. If you've got the thought, let's try to tackle it right then and there. We will not wait. So let's jump in. So Russell, I like to start with the obvious question. You know, what does a business broker do? When I tell people I sell businesses or I'm a business broker, they're like, what is that?
Sure.
So let's just talk a little bit about the basics, you know, the role of a business broker and why a business owner needs professional representation.
Fantastic, thank you. Well, it's important to get in touch with your local business broker probably a year or two in advance of your intended sale. And the reason why I say that is because if Adam or myself can get in front of you a couple years in advance, we're going to pinpoint some major holes that you're probably not looking as a potential hole in your business. And we're going to give you advice. So when it's time to come onto the marketplace, then you're in a better position to get a majority of your money up front and not become the bank to a stranger. So very important that we get in early. We start building the relationship with the business owner. And based on our experiences with many buyers and closing many deals, you know, we really do know what they're looking for, and we can guide you, you know, just to get that business on the market. But when you hire a business broker, you're hiring us to confidentially market your business because you're trying to run your business. And for you to take on that role, you wouldn't be able to do both. So market your business confidentially is extremely important. The buyers come at us fast and furious, and 98% of all buyers will never buy. So when we're handling the buyers, we are trying to eliminate them based on our knowledge with our conversation with the business owner. So qualifying the buyers with their money and the experience to run the business, because every business is unique and you do need certain experiences. And then there's other points that I wanted to bring out. You know, the quality, you know, the quality of how you're gonna, how we're gonna transition, quarterback the deal for you. That's important. as the business broker, we're going to be able to talk to the buyer. We're going to be able to talk to you. We're going to talk to the legal representation, the accounting. We're going to be able to jump from one side to the other. So we're going to be able to negotiate on your behalf, protect your interests, and drive the deal to the closing table. We're also going to be able to put together a extremely professional team of accounting, legal side, and consultants that will be able to guide you, to get you there for the purposes of the tax purposes, also for the purpose of getting it to the finish line. So, we do a lot, and a lot happens behind the scenes that you probably don't know about. But at the end of the day, the goal is to get the business to the closing table. But the unfortunate news, at least in Florida, 7 out of 10 businesses that hit the market do not sell. So the earlier the preparation, the more likely you're going to have a better chance of selling.
So Russell, I want to follow up on two numbers you talked about. You said 98% of buyers don't buy. We always get approached by sellers that say, oh, well, my friend's going to buy this, or I talked to this person about buy this. And you and I know from experience that those folks never end up buying the business. But the other number that you talked about was 7 out of 10. There's various numbers, 1 out of 4, 3 out of 10, et cetera, sell. So today, we're going to talk about some of those things and mistakes, things to work on and mistakes we see that hopefully we can elevate. Now, both Russell and I sell more than 3 out of 10. Those are national averages. But part of the reason we sell a higher percentage of that is, if you're ever looking for a business broker, and again, this is not a commercial for Adam or for Russell. This is about helping you learn how you can be in a best position. But if you do want to reach out, you should be looking through some of the industry organizations, the IBBA, which is the International Business Brokers Association, and the M&A Source. Both of them are excellent organizations. Russell and I belong to both of those. And work with a broker that has the credentials, people that are certified merger and acquisition professionals, people that are certified business intermediaries. These organizations, much like an accountant or attorney, have continuing education, have ethics standards, have ways of doing business. So if you're out there searching for a business broker, make sure that you're doing your homework. And like Russell said, start a year or two in advance. So we're going to jump into some of the other things that you can do to help yourself. But one last question, Russell, before we switch pages. Why is it, do you think, in all your years of experience, a business owner understands they need an attorney and they understand they need an accountant and maybe their financial advisor or wealth advisor? Why do they not believe that they always need a business broker, that they need professional representation to help them in a deal? What does your experience tell you in that?
Well, I mean, listen, the business owner is the expert of their own business. So most business owners feel they can probably sell the business better than anyone else because they know the business. But what they don't realize is if you're, there's 3 ways to get out of business. You can sell it to a family member and the family member wants it for free. They're not paying any significant amount of money. You can sell it to a friend and the friend's going to want a deal. There actually might be multiple ways, right? Or you can hire a business broker and we'll get you the highest possible price. And the last way to get out of business is to shut it down and you won't get anything for it. So yeah, there's a lot of ways you can exit your business. It's really your choice. But the first 2, you're going to be sacrificing price and becoming the bank for the friend and the family member, which is all good and well if you're trying to preserve your legacy within the family. And that has to, a lot has to go into that. But the most profitable way for a business owner to exit their business is to get professional representation. And it will go a long way for taxes, and it'll go a long way to, letting you run your business while the business is up for sale confidentially, because it does take a year. Sometimes it takes 18 months. Sometimes it takes 9 months. It's impossible to predict. But I can tell you, in the light of the market that we're in right now, it takes longer to sell your business than it did when we were in the best economic conditions.
Well, let's move on. Now that we've sort of established what business brokers do, the role they play, how you can seek one out, and why credentials are important. Let's talk about things that you've identified over your experience. These are the items that business owners should really be focused on. So let's jump right in. Let's talk about books and records, Russell. Tell me
Yeah.
when that comes up, what comes to your mind, what a business owner should be thinking about now?
Well, if there's two types of businesses that are fully documented and businesses that have a lot of cash. So let's go with the cash. If you have a business that's producing a lot of cash and you're not putting it in the bank, then that's why I'm telling you to start a couple of years in advance, because it only really matters if the last 2 or 3 years of the business. So put that cash in the bank, get everyone on the payroll, make sure everyone's legal, make sure all the insurances are based on current sales, based on proper payrolls. Get legit, okay? And then you'll have a better valuation. You might have to take a hit on your income a little bit, but that will help you sell the business. So like I said, it only really matters is the last couple of years. If you are running a very up and up business where basically everything's going in the bank, make sure you're on QuickBooks Online. Make sure you're using QuickBooks. Most businesses use that. There are some specialty softwares for financing, for P&Ls and everything. But QuickBooks Online is the way to go. Get a QuickBooks Pro Advisor in every month, a monthly fee. They will clean it up for you. Make sure your bank statements are reconciled. Make sure you're doing P&Ls every month or every quarter, because the business broker is looking for it. And that's where we can capture a higher value. If your business is growing while we have the business up for sale, you could be increasing the value of your business. But a lot of business owners are so behind on their books. All you have to do is outsource it. We're not asking you to do it. Just outsource it. Hire someone responsible. Put a little money into the books, especially those last 2 or 3 years when you're trying to prepare for sale. And the buyers, instead of getting interrogated by the buyers, they're going to be praising you for your being so prepared and having great books and records. You'll get a better multiple. The deal will go smoother. No one can promise you it's going to be smooth sailing. It just all depends how you run your books. But books and records are also important. Number two, I'll keep jumping into.
Let me jump in real quick, Russell. So 2 questions I always get asked is, why don't you add back distributions to the add backs? And why I want to keep my taxes low, so I'm going to continue to pay myself a low salary, take out distributions because I'm taxed at a lower basis. And those are common things that we're constantly hearing, and what we try to explain to them is, listen, you want to get it documented on your tax return. You might pay a little more in taxes now, but you're going to get it on the back end, a multiple of 2 or 3 times whatever
Right.
that cash flow is. So when you come across these, Russell, what do you tell owners?
Well, a distribution is recorded as a balance sheet item, and we are recasting off the profit and loss. So when we're recasting, we're looking at the owner's salary, we're adding back depreciation, interest, we're adding back the net income, we're adding back personal expenses, we're adding back non-recurring expenses. So no one's telling you to rearrange your life, but distributions in the general accepted accounting principles is a balance sheet item, and we are not recasting the balance sheet to get you an owner benefit. So distributions is great. And the theory behind the distribution is, we don't know, when you took the distribution, we don't know it was from profits of the current year or the prior year. So that's why, it's a major question mark. And every seller asks me the same thing, but distributions are not an add back. It's on the balance sheet. Been there, done that, and lost deals because of it. So we do not add that back.
It comes up so many times, and folks on my team run into it all the time. I just wanted to give you a chance to weigh in. So let's move on to the second one, lease preparation.
Okay, well, down here in South Florida, not many people own their property, but I will tell you, if you have the opportunity to buy the real estate, depending where you are in the United States, get ownership of that property. You will control your destiny. Number one, because when you sell the business, you will then have a residual income if you decide to just lease it to the new owner if they're not ready to jump into the deep end of owning real estate. You're going to have a great residual income for years and years. And most important, when you're ready to sell the real estate, you have a buyer ready to go. They've already owned the business for 5-10 years. Now they're ready to, jump into the real estate. So that's a wonderful thing. But, a lot of cases down here in South Florida, we have a lot of large shopping centers. And what we typically find is that the seller signs on the personal guarantee for the entire term of the lease because the landlords are not negotiating. They forget they do that. And when they come to sell their business, they realize that the lease guarantee follows them through the options period. And it becomes really a non-negotiating part. So if you're in a position where you've been in business a long time and you've got this great relationship with the landlord, and you're negotiating options before you're selling, try to get your name off that lease. Okay.
The personal guarantee you're referring to.
Yes, try to get that name, get your personal name off, because you have the best negotiating position when you're negotiating that option. If you have, maybe get it limited to 1 year, rolling 1 year or something like that. But be prepared if you got a landlord that really doesn't care, if the personal guarantee is going to follow you on that sale of the business. And then you just got to make sure you got the right person investing in your business. So at least you got to have options. You don't have options, you don't have a business to sell.
So let me just say that in a different way. If you are in a leased facility and you have another year left with a 3-year option and you sell that business this year, what Russell is saying and what we also see is just because a new owner is coming in and taking over that lease, which would be assigned, landlords are not very comfortable letting you off your personal guarantee. So they may put the new buyer on a personal guarantee, but also keep you on there as a personal guarantee. So when you are negotiating those options, after you've been there a while, try to make sure that you are taken off as a personal guarantee. Okay, let's move on. Russell, business preparation and premise preparation.
Yeah, so, just no different like a house. When you go look at a house, you want to look at something that's organized and cleaned up. So look at your office, look at your business. Does it need a fresh coat of paint? Are paperwork everywhere? Are you a hoarder? Are you hoarding everything possible over the past 30 years? Clean it out. Get rid of stuff that you're not using. Old office equipment. Don't let multiple copiers sit around in the office. Just clean it up, because the first impression of the buyer, is very important. And that goes for retail businesses also. Getting everything organized, nice and neat, because the person coming in is judging you on how the business looks.
Yeah, very, very true. Let's talk about your professional team, getting them in place and when.
All right, well, that's really simple. You got to have a great CPA that you trust, and you can actually have a conversation about this, because you're going into one of the largest tax events of your life. So it's called the asset allocation, and that's where you're gonna talk about it with the business broker and how much taxes you're gonna pay on the sale of the business. But you're gonna talk to your CPA about the allocation of how the sale is allocated between furniture and equipment, goodwill, and non-compete. So it's important to have an upfront talk with the business broker, your business broker, and have a conversation with your CPA, and because that's very important. And of course, have your legal representation. If you have a buddy who is an attorney that specializes in personal injury, well, that is not the guy to do your business transaction. So I tell all my sellers, if you have a heart condition, are you going to go to a podiatrist? Probably not. So you want to get to an attorney that knows business transactions, that are not sitting in court, that is not doing hearings, because what's going to happen, you're going to have deal delay. Your deal's not going to close. So Adam or myself, we have a team of attorneys that will communicate with the business broker, because if the attorneys are not communicating with us, then we don't have the ability to cross party lines and solve the problems. We are the ones that will solve the problem. So get the right people in place now, okay? And make sure they are there and they have the time to dedicate to it.
And I would add, in addition to the attorneys and the accountants, is your wealth advisor. We did a program on that last month with Andrew Kittleson at UBS, really talking about the importance of planning, making sure, can you sell the business? Will you have enough money to handle the next phase of your life? It's really important to have your professional team in place. And really, that's what we're doing throughout these different Contemplating Your Exit webinars, is to really provide these different perspectives to the business owners and to the advisors of the business owners, so they know that their clients are getting the best representation when the time comes. Let's talk about transition preparation.
Well, every owner wants to be out in 30 days or less. Now, and some cases, you do get that, if you're in a retail business. But if you're in a business where you're the legend in your own business and you have all these relationships, well, you better be prepared for 90 days, 6 months, sometimes even 2 years, depending on the size of the business. So just understand, people are trusting you, they're buying your business, they're buying your baby, they are giving you 100% trust, and they're relying on you to successfully transfer all those relationships that's taken you decades to build. So you're not running out the door in 30 days, and you really have to treat the person like a son or daughter and help them carry on your legacy. And so you can come back 20, 30 years from now and you'll see your business even bigger. But, I would say, 6 months or less, and it's an important part of the negotiation up front. And more than likely, I could tell you more often they let you go early. You get out of jail early, and you go home and you're able to enjoy your life.
So we have our first question of the day, and thank you for submitting this. And those who are watching, please, again, feel free to submit any questions into the Q&A or the chat, and we will read them, try to do them at the same time. This question asks about negotiating the transition timeline. As you talk about 30 days, which is typically part of the price, how do you negotiate when you don't really, you still are just getting to know this? How do you negotiate a transition, and for how long? And then how do you discuss getting compensated, recognizing that they're going to need the lion's share of the cash flow? So yeah. Russell, what's your experience on transitioning, negotiating a transition agreement between the buyer and the seller?
Listen, I understand that the business owner is worth a lot, and they get paid a lot because your business is worth a lot. But when you are working for someone for that 6 months, or you're not going to get your market rate. Okay, reality is you're not going to get your market rate. I have a seller right now working 6 months for a salary of 50 grand for a year. He's probably worth 200 grand as a CEO, but you're going to kill your own deal. You can't get paid twice. Okay, yeah. You got paid once. You're going to get paid a little more. It's part of transitioning the business. And like I said, more than likely, everyone has different management styles. So in reality, they never really keep you for that entire time. But you're going to have to take a little pay cut in order to satisfy the buyer and get the deal through.
Let's talk about licensing. We sell a lot of service businesses, whether they're HVAC, plumbing, general contractors. Talk a little bit about your experience in licensing and making sure that the business is in a position to be taken over by a new owner.
Yeah, at least here in Florida, if we're selling a contractor, the license comes to the person's individual name. So when you're talking construction, you might need to get a qualifier. That's important, but there's exposure to the owner that's qualifying. So that's, once again, making sure you have the right buyer in place, that you feel that they're not going to expose you by running your company. I sold the check cashing business. It took us a year to get the check cashing license. So understand the requirements of the state for your licensing, and that could dictate how long it takes to sell the business, the challenges up front that you are going to be dealing with, because licensing does create a major problem. You're talking about home healthcare businesses, anything in the medical, it's called a CHOW in South Florida, change of ownership. These are major things. Sometimes sometimes you got to buy the stock of the company to transfer the license.
Yeah.
So it's a big deal. And your business broker should have the experience, should be asking the questions up front so they know how to position the deal and how to prepare the buyer on how to do the deal based on the licensing. Very important.
I would just add, Russell, one other place, in addition to the state, obviously talking with your attorney, the seller's attorney, but talk with the lender. They may have additional requirements. We've dealt with that on SBA, on HVAC. Well, the state says one thing, but the SBA policies say something else. So we had to be creative. So licensing can be a big issue. Another thing that concerns people in the licensing world is if you're the owner and you're the only one, again, talking about an HVAC business, and you're the only one that has the license. Well, lenders are less comfortable with that because the seller, if they keep the license in their name, they can hold a new buyer hostage. So you gotta really have a story on licensing and how that's going to be handled. Let's move on to questionable business practices. Russell, you've seen everything. You're in South Florida. What can happen does happen in South Florida. Talk a little bit about what you mean when you say clean up questionable business practices.
Yeah, I mean, there's, sometimes, selling a lawn service business, they have some illegals, you can't, they can't, depending on most buyers don't want to deal with that type of issue. We talked about cash in the business, underreporting payroll tax, sales tax, underreporting insurances. There's crazy amounts. I had a situation with a bagel restaurant. He was underreporting his sales to the landlord, and the landlord had an overage, all right, which would then affect the owner benefit by 40 grand. So yeah, stuff like that. You just got to understand that it will all come out.
It's time to clean it up before you go into
market. Got skeletons, tell the broker your skeleton. It will all come out. And listen, it's horrible when we have to start dealing with due diligence. You lose the trust. So let's clean it up.
Yeah. Okay, let's move on. We took a little light approach here. There's actually someone in our industry that does cartoons for our little narrow world of business brokers. And so we just want to put these up here. Again, talking about bearing those expenses. And then the other one we're gonna touch on here is talking about a mistake we see is owners waiting too long. Russell, talk a little bit about this, what you see and what you recommend to owners.
So if I meet a business owner 70 plus, they are the legend in their own business in their mind. And when someone is 70 plus still owning the business, if they sell the business, they're probably going to be a very tough seller because they will not be the same person once they sell the business. Because they just in love with their own business. So, business owners who are in their 60s to 70s, they understand that there is a cycle. Sell at the top. Now, I'm not telling you to sell when you're 50 because when you're 50, you still have another 10, 15 years in the tank. But you really need to have a life-changing event going on to really want to sell your business, because we're not going to get you life-changing money unless you have IBBAs of $1 million or more. That's life-changing money. If you're a business owner that has, IBBAs less than $1 million, you're going to get a great, incredible bonus. But your life, if you're going to live to 90, it won't possibly support you all the way to your 90 years old. So, but yeah, so I'm looking for business owners who have a real reason for selling. It's great to sell at the top. You're going to get the maximum price, but if you're on your way down, the questions that the buyer come at you when you're on your way down as the business is eroding, you're on that downward trend. It is, it's a fast decline, and a buyer's trying to determine if they're catching a slipping knife. So that's the challenge that we deal with, and we get these deals done, but maybe not at the highest possible price that you remember that your business was at.
Yeah, my two comments on this slide, and I use this for a lot of presentations, is one, if you're on the decline, the owner always wants to price the business based on back at the top. So that's a hard conversation. And two, what I tell owners all the time is the best time to sell a business is when you don't need to. When you have to sell it, the buyers know that, and they'll price it accordingly. Okay, we're moving along here. So I want to jump through these pretty quickly here, Russ. I want to be sensitive to people's time and also open it up for Q&A. But these are some of the top mistakes that we see. If you want to sort of go through these pretty quickly, some of them we've touched on, but Russell, let's just sort of touch in on the mistakes that we see.
Yeah, the lease issues we touched about. Make sure you have a long-term lease. Try to limit your personal guarantee when you can. Or buy the real estate. That's really, get that real estate. A concentration. 5% in construction represents 90% of your business. Great for you, sucks for the buyer. Buyer's going to be scared. So that comes in where maybe the owner has to stay in a lot longer to transition those type of accounts. We talked about seller being the legend-owned business. That's what you don't want to be. You want to have experienced staff. You want to diversify. You want to build a business where you can take a vacation. Don't be the legend in your business. Unrealistic pricing expectations. So we have access to thousands of comparables on every type of business. So when we come in with pricing, that's your landing spot. No one is going to pay you a moon price. We are selling businesses that are on planet Earth. We do miracles, but we're not magicians. So listen to your business broker, listen to Adam. We want to sell it for the highest possible price, but realistic price expectations is important. And going on to the other point, seeking the perfect deal or buyer, there is no perfect deal or buyer. It has to be a win-win situation. If it's a win-win situation for all, you'll get to the closing table. If it's one-sided, you're unhappy. If it's one-sided on the buyer, it's just not, it has to be great all around. So just keep that in mind. Every business has issues and every buyer has issues. So just understand the buyers are relying on you to help them learn your business. And then not planning for an exit. I mean, the minute you go in the business, you should be planning for your exit, growing it to the maximum value. And what I would recommend is all business owners having a coach. If Tiger Woods can have a coach at the highest level, then a business owner should have a coach. I have hired business coaches myself to help improve my business. So hiring a business coach will get you through the wall that you're going to hit one day at certain levels that you need to break through. That will help you plan for your exit.
So we got a couple of questions that have come in, and I want to get to those here real quick. Talks about one of the questions talks about pricing. And it says, we had a challenging year last year, but there's so much potential in this business. One of our competitors has gone out. We think it's worth more than most people do. How do you address? I mean, I know my answer, but Russell, people tell you all the time, this business has so much potential. And your answer to that, to the seller, is what?
Every business has potential. Potential is what's going to drive the offer. If you had the business evaluated, it's based on past history. We've had this COVID situation. We still have it. I consider a business that has recovered when they hit their January and February of 2020 numbers. If you hit that, that means you're going to be able to get proper valuation. But a lot of businesses have not. So in this case, if your business has suffered like a lot of businesses, maybe use 2021 to get it back to the level so you can get on the market in 2022. The people that are selling right now need to sell or have, basically had a great business making great earnings and they're ready for the next phase of their life. You have to have a real reason for sale. The greed of money will not do it.
Yeah, no, I mean, people always want to have potential, but the banks and the buyers are going to pay based on past earnings capacity of the business. The other question comes about exit planning. And you mentioned earlier 1 to 2 years. And so I would encourage the gentleman who asked that question, I think, anywhere from 6 to 24 months to start talking to a business broker, start talking to your advisors, your CPA, your attorney, your wealth advisor. I can tell you this might sound sort of unusual to hear, but the worst call Russell and I and other brokers get is, I need to sell my business now. We know that you're either damaged, sick, or your business is not in an optimal condition, which means you're going to get a suboptimal outcome in price. Any comments on that, Russell?
Listen, most buyers who are looking out there, they're really trying to uncover why the business is for sale. Or is there something hiding? And buyers are concerned. Why would you sell something that's so great? Once again, it comes down to life-changing events that would cause you to sell your business. So, buyers have their doubts in their mind. It's your job to tell them elsewise that the business is healthy.
Any other questions here for Russell? Before we wrap this up here, I'm going to give you guys another minute. We got one more question here. What do you do, Russell, if you are involved in a legal dispute and yet you want to sell your business? They're asking, do I need to disclose that? You want to talk a little bit about that topic?
Yeah, if you're in a lawsuit, if you're being sued, then there's not much that we can do. I kind of stay away from that because even though they're technically they're buying the assets of the business, it's probably going to scare the buyers away. Obviously, if a broker does, believe me, I have engaged in businesses and I have brought on the market where there was lawsuit pending and I really chased my tail and never got the business sold. So you really should get it resolved and then bring it on the market. And
yeah, I'm going to answer that slightly differently, because I have sold businesses that have been sued. And, first of all, the seller has bought tail insurance. So what happened on the seller's watch, they're responsible for it. The new owner would not be. And second of all, I would tell you, work with your attorney and disclose. You want to be the one telling the potential buyer, hey, there might be a $1,500, small claims suit against you. That shouldn't stop your process going forward. You just need to disclose it. And, worst case, you can put some money in escrow to cover that for, 12 or 18 months on the small deals. But talk with your attorney. And our experience is we've been pretty good about disclosing that up front, and that really mitigates the issues.
Good. I'm glad you had to get a deal done though. That's great.
Yeah, absolutely. Well, we worked in one industry where they deal with a lot of homeowners and in the HOA space, and they had multiple lawsuits going on. Well, the buyer was from that space. He understood that's part of the business. So it wasn't a concern to the buyer. It wasn't a concern to the banker. And anyway, because it happened on the seller's watch, they were going to be protected.
I'll mention, make sure your businesses are ADA compliant. I had a deal get stopped straight in their tracks because they weren't ADA compliant. So just keep that in mind too.
ADA compliant and healthcare. If you've got over 50 employees, make sure you're in compliance there. Again, talk with your advisors, make sure you're in good shape. Before we exit, I just want to bring up to everybody, I'm beyond excited, just like I was, to have Russell on this month. Next month, we have Robert Caldwell on with Family Firm Resources. We're going to talk about navigating family dynamics. This is of personal interest to me, having grown up in a fourth generation family business and selling that along with my family. So I have notebooks worth of questions to ask Robert, but really excited about having Robert on to talk about working with multi-generations in business today, because it's a very big issue. If anyone wants to get in touch with myself or Russell, here's our contact information. For those of you who have attended, we will send out a link to this after. So if you want to watch it again, or if you're an advisor, you want to forward it on to your clients, we welcome that. We're happy to answer any questions. These have we really have tried to make these non-commercial. These are about educating you, the business owner, or you, the advisor who's working with your business owner, so you can ultimately have the best outcome when you are contemplating an exit. So Russell, thank you very much for your time. Really appreciate your expertise and knowledge. I can't tell you all what a treat it is to have Russell on. He's just invaluably experienced in this industry and is well regarded across the country and the state of Florida. If you have any questions, feel free to call him. And again, both of our contact information is there. Russell, thanks. Really appreciate it. To our guests today, thank you all very much. And we appreciate your time. Thank you.